Alright, so welcome back guys. So in this video I'm going to be teaching you exactly how to find draw easiest in the easiest form possible without adding too many ICT jargons or checking out for many things. Now, if you don't know your draw liquidity as an SMC or ICT trader, you will be fucked multiple times. Okay, you have more issues finding the direction correctly. Out of 10 times, you might get the direction correctly just twice if you don't know what draw liquidity is. So, draw liquidity is basically like the direction where you're expecting price to go. For instance, price is moving this way. Now, for every time price pulls back and wants to go back up, you know the destination is going to it's here. So that destination, what is drawing price, it's called draw liquidity, like more like a magnet. Anywhere price goes to, there is a draw of liquidity there. If price is trying to draw to the downside, there is a draw of liquidity there. Now, draw on liquidity doesn't mean it must have to be a buy side or sell side liquidity kind of thing. It could be fair value gap drawing price, it could be order block drawing price, it could also be sell side liquidity or buy side liquidity drawing price. But this specific high area of interests draw price like magnet, but you can't know when this one to happen or where it's gonna go to if you don't know how to locate it properly. So now what this video is for is just to help a large number of people that struggle with understanding draw liquidity because of the way ICT teaches this stuff and the way some other ICT YouTubers uh, do their stuff. Now, the easiest way is this: you need to understand market structure. Now, ICT concepts do not regard market structure because he sees it as a retail concept, but smart money trading, smart money concepts, those who do supply and demand regard market structure pretty much. So if you're a beginner, you're new to this whole space, I would advise you to go for market structure because if you know market structure, understanding DOL can be very easy. But if you go in with the whole ICT logic of discarding market structure and just do internal range liquidity to external range liquidity, just know that you might have serious issues identifying the draw liquidities. So now, understanding market structure is that market structure we have the uptrend, we have the downtrend. If you have zero foundation in market structure, the video is in this YouTube channel. Go check for market structure video. I'm gonna put the link in the description. So yes, what happened here is we have uptrend market and we have downtrend market. Now, the market is not as textbook as this means there are some other complex structures inside each structure level. So, for instance, if I have an uptrend as big as this, I expect price to pull back low to the demand before it takes up to the upside. That's what I actually believe is not. But the thing is, this cannot just happen like this. Okay, what's gonna happen is if there is something ever like this, if there is something ever gonna be looking like this, now imagine this to be my external structure, and imagine this to be my internal structure. So I would need price to move this way till it gets to my um, demand zone, and then I'll wait for price to shift bullish and then for price to go back up. So what you have to learn from this is the structure here is not the same type of structure here. If I was going to draw everything with the whole external structure, I would draw it just one leg like this to summarize everything. But what you have to know is that inside each of these legs, you see even here that it wasn't highlighted, even here it wasn't highlighted, this long line here, we still have something like this here, but I just don't want to highlight it. I just want to show you what the external versus the internal structures look like. So the internal structures to like really identify them, you have to understand that wherever there is a internal structure between the highs and lows of that internal structure, sorry, between the highs and lows of that external structure, there is always going to be internal structure inside. Now this is the low of the external structure, this is the high of the external structure, and what is inside is is what we call um internal structures. So now bringing draw liquidity into this is that if you're coming to the chart day one and you are at this point of the chart, imagine you have not seen all this way down. You know you would like to buy from discount levels, which is below here. And I'm sure you know what discount level means. So immediately this becomes your draw liquidity because you know you need some retracement down before you go up. So in as much as you know that's your draw liquidity, all you need is what a shift in market structure internally here. That's all you need. And when that shift of market structure occurs, you need price to pull back to FVG or supply or any POI and then move down. So this is now your new destination. Now, the smartest way to do that is this can just be a stereotype. They can be other point of interest on your external structure at the left here. I get to me. I can influence price to just reverse from any of these points, even before it gets here. Now, the thing is, you have to be very smart, okay? So, if you know price is in any of these levels, you want to see how price is reacting inside of it. If price reacts very weak and does not react the way it should, you know that okay, we are traveling at least to the next POI. So now if this other block fails, we know we are traveling to this, so this becomes a draw on liquidity, like the new destination. If this fails, we know we're coming to this next draw on liquidity. That's why counter trend trading is not too good, because if you're not very experienced and observant, any of these POIs can kick you out. Okay, so that's why they say the trend is your friend. So when you finally at this demand zone right here, you know your draw liquidity is simpler to know. Your draw liquidity is here, one direction, one place. Unlike when you were trying to counter trade, you would think here is a draw liquidity first. So when it gets there, you want to see how it reacts. When it fails this, you're thinking here to be the next. When here fails, I mean the price just slides through, keep going down. The next you're gonna thinking if it's here as the next draw liquidity. And if this happens to fail, you would think that this sell side liquidity here is gonna be a draw liquidity. So you just keep guessing till price decides to reverse back. But when you're trying to look for just buys from discounts, following the trend, the pro trend, okay, not this counter trend stuff you see here. So following the trend, you just know that your drawn liquidity is this side, this buy side liquidity. So it's easy. So what's drawn? How to find drawn liquidity is you have to understand your market structure properly. So we'll go straight into the chart, and I'll show you how to apply this technique into the chart to know your drawn liquidity and always trade in that direction. Now, don't do stuff like trying to predict weekly high or weekly low of the high, or sorry, high of the week or low of the week. Stop trying to predict high of the day, low of the day. Stop all those things. Just follow the trend and always know what you're looking at. This applies to a downtrend market where you know that the previous low is going to be the draw liquidity since price, if price is on a downtrend. So let's go straight to another example. So right here we are on USD card 4 hour chart, and my markups are already placed on. So I need to take a look at this. Now, imagine this day, okay? Imagine today, or just imagine 6th February, Tuesday, 2024. Imagine you're not seeing these other days, but you're just seeing this. What's going to be your draw liquidity? We just broke structure to the upside. You know your next draw liquidity is going to be down. And we got multiple POIs along the way. We have this FVG, we have other block here, we have FVG, we have FVG, we have other block here, we have sell side liquidity down. But there are many of these POIs. So you're going to be counter trading. So you're going to look for sales towards these POIs. So see how price uses very big candle to fill this FG, you know that this FG is not going to influence anything to go up. It has failed. You watch how price sits inside this other block with this big red candle right here, this big black candle, bearish candle right here. You know that this other block is about to fail. So you keep looking for a sell trade, sell trade, sell trade. You see how price just slide through this FG, you know it's gonna fail. So you know that this was gonna be the next destination. Now when price got there, you see how price sprung out from there. Now, when price got to this discount POI, what's going to be your next draw liquidity? This red line. That's the next direction where price is going to like draw to. It's now obvious. So you're following a higher high, higher low method. So from here, you're thinking of looking for buy trades towards this red line. So when you know draw liquidity and market structure, any entry drill works. Any combination of smaller time frames to get your entry confirmation and entry drill depends on you. I'm not here to impose my entry drill on you or force you to do my entry drill. You have to understand and take the message of this YouTube video. What's the message of this YouTube video? Draw on liquidity. And when I mean draw on liquidity, I'm trying to show you how to know the next direction of where price is going to go. So at this level, after we hit this um buy side liquidity, we closed above this now like a breaker structure, so we know the next thing price is most likely going to do is to pull back down inside a discount, inside a discount POI. So what happens is your drawn liquidity next is going to be down, so you're going to look for sales for some time till you get to that discount POI here. And then when you get there, you know your next drawn liquidity is going to be up here. Is it just gonna go in a straight line? No, the market is the market. Of course, to dance, do a lot of dancing and the rest of them. But you can see it still got back here. So how can you take or benefit from all this dancing of the thing? First things first, you should keep track of your smaller structures. Now, for instance, all of these red lines you see me marking here are internal structures, okay? And you'll be like, wow, internal structures are this big. That's because the externals are way wider. This is my external range. Okay, this is my external range. So between this high and this low is such a big range, is it not? Good. So inside that range, between this high you see and this low, inside that range you have lots of price action going on. So therefore, that if that's external, then these red lines you see showing a breaker structure are internals, and for every internal range between this red line up here and this red and this line, I'm going to make it red now. Okay, between this boundary, everything that goes on inside here is fractal structures. I know you have to be very good in market structure to follow up this fractal structure, so you care more about the fractal structures than anything else. Okay, than anything else. That's one. Two, you want to make sure that you take trades from point of interest, new point of interest on the 4 hour time frame every single day. So no matter the direction of PL you're trying to face, you're trying to trade into, make sure price leaves from a point of interest on the 4 hour for every new day. Don't use yesterday's POI mitigation on the 4 hour chart and carry over to the next day, you most likely get clapped. So what I mean is this, just because looking for a perfect example. So we see on this day, 20th February, price, we see that this is the 20th February, we see that price has reacted from a demand right here. And we know the next draw liquidity is higher. We know that's the next direction. No. So what are we gonna do when we are gonna buy? So we're gonna look for how we're gonna look for buys. We remember we need the fractals to shift bullish. These green lines, we have to make it shift bullish. Now we just came into a point of interest. We made a high, we pulled back, we made a higher high, we broke above this high. So what that means is that we have flipped bullish also on the fractal structure. Okay, so now we have been able to retrace back into some kind of other block here. You can see, okay, retrace back some kind of other block here. We can see, Okay, if you look, no, I'm not a fan of other blocks when price closed above the previous high with a week. So I'm still trying to look at this because this is a trade I took. I'm trying to be sure. So as you can see, the body closed above the high, so it's clear. So that's what I do sometimes when I want to verify. I stretch my chart. So that means this demand here is valid. If the demand ever leads to a break of structure whereby the candle body close above the previous high, then the other block is valid to take a trade from. So price traced into it, and I use my smaller time frame to look for an entry. And when I was buying, I exited at this high. Okay, this high, this high right here. That's where I exited. Now, what should you learn here? You should learn that even if you know that this is your drawn liquidity, this direction, you also have to find identical highs on the fractal. This is my internal structure high, it's red, and the smaller unit of structure we are dealing with right now is on fractal, and this is the high. Okay, make it green, and this is the high. So therefore, if I'm taking my profits or I'm exiting my trade, I'm exiting here because this is the closest one I can do for the day, for every single day. So for this day, first things first, I know I was bullish. I discovered my draw liquidity red line. I know I was bullish. We broke structure to the upside. That's how I knew I was bullish in the fractal structure. We retest to other block, which covers the fact that I said you must choose a new POI every single day. Watch price entered into this other block today on this 20th February. I looked for my entry and I exited my buys at this previous high because this was a new high created after it broke this high. So I have to take my trade off here to be safe because anything can happen. The same thing happened the next day. Okay, the next day, same thing happened. This is my other block here. And price got in, retraced back into it after breaking structure to the upside with body, as you can see here, retrace back into my other block, and I look for an entry on my smaller time frame, and I'm facing this direction still, but I must exit at the most previous fractal high possible to save myself the stress in case it tries to reverse. And you can see it hit my TPs and then reverse, and that was not my business coming the next day. Now, on this next day, what did I do following the whole draw liquidity thing? I know my draw liquidity was still up because I'm in an uptrend, obviously going higher and higher, right? I know my draw liquidity was still up. Very sure, very, very sure of that. So now, fractally, we have changed structure to the downside. Should I start selling because you have changed structure to the downside? No, it's a mistake a lot of you make. We should only think of selling when we have been able to break through this low and let this red high, this red low, internal structure low, and let this red line high. If it gets broken, that's when we can respect bearish fractal structures. Now we just can't. So price broke this low that led to this high fractally and we returned bearish and you're not supposed to do nothing. So I waited until price was back on track. This is where price was back on track. This was the last high that was formed. It was formed on 21st February. So what happened is that until price breaks above this, I can't and I won't. I will never ever trust whatever I see the market do around this region. So it means 22nd, I'm skipping 23rd, I'm skipping. I'm not trading this pair. I look for something else to do or something else to trade. 26th, I'm not trading. 27th, I'm not trading. 28th, I'm not trading. 29th, that's when I'll trade this. Now, on 29th, on 28th, we hit the drop on liquidity already. Now we are pulling back down. Now remember when I told you guys that when you're trying to counter trade, when you know that okay, you're broken through to the upside, but then you're trying to counter trade down, you have to be aware about um um POIs on your left because they can influence price to go up swiftly. You have to watch them fail. Good. Watching them fail is watching how price reacts on them. Like this one now, price entered here with an indecision candle. The next candle bearish. You see how price is slowly dipping inside. I know it's not going to hold. What about this? See how the first candle enter inside, no much reaction. The next one enter beginning, it's not going to hold. The same thing here. When you look at this one, price enter inside this place, did not do much, did not do much. The next day, price, as price entered this and did not do much, trying to count first buys inside this place would not work out. So in as much as you're in this around this level, your property to here, sales would make sense. But once you get to this level, then it's better you take you don't look for any sales again. You just stay neutral. Okay, you don't look for any sales again because you know this kind of things upward, and you should initiate your buys from here. So in such case, we know that okay, we have broken structure and then we must pull back to discount levels. Pulling back to discount levels is not compulsory, and that's why you're told to stick with the trend more than counter trading. Counter trading is not what I recommend to you, but sticking with trend is better. On this day, you could have cut this trade on smaller time frame, jumping from here. Now, from here, we know we are jumping and we might be aiming here at the next draw liquidity. So right now, we can't tell if the next draw liquidity is high or is down until price has shown more price action. So yeah, this is just an example of how to use the higher highs, higher low methodology to get your. Alright, so this is an example on GPPJPY. Okay, so yeah, now take a look at this. This is my 4 hours back on my 4 hour chart. I want to make this very easy to understand. That's why I'm using the 4 hour chart. But this applies on every time frame, every time frame. But the main time frames to build this your trade idea from is daily and 4 hours. That's why I'm using the 4 hour chart. Okay, so it's the same thing. So when we come to draw on liquidity again, we're gonna go back. I will look at the daily charts if it will help you understand more because I just need you guys to understand better. So now, if we are looking at when price broke this high, I know a lot of people be asking, but in cases like this, when price breaks this high and does not just pull back and then goes high a bit before it starts pulling back, I know scenarios like this. So when price breaks a previous high, you cannot just automatically know that the drawn liquidity is down until price has shown signs that it's down. And how does price show signs? Remember when I did the first example, I said, in case this were price, you see, this is your internal structure, for instance, just like how mine is big. And for you to know that this down part, this demand is your next drawn liquidity, you need to see something like this. Okay, a, a change of character, a fractal structure that has shifted bearish, you know that okay, price now wants to travel down. So all of these POIs around here, price will test each of them. The weak ones, price would enter it, retrace, and go even further down. If it meets any weak one, it will do the same thing, retrace and drop even lower till it gets to the strongest one down, and then it channels higher. Okay, it channels higher and higher and higher. So that's the same format. That's the same format what's happening. Meaning at this level, see at this first level, you're not going to just know that the drawn liquidity is down. No. At this level, you still think of price going higher because you're in an uptrend. You can't just predict that it's going to go down. But you only look at it's going to go down, that scenario of it going down when it starts shifting bearish, you know that it's on a long ride to this discounted POIs down here. So that's exactly what you have to focus on. So now let's go to GBJPY and see what we're talking about. So we broke this internal structure high, this red line, and there was no buy POI at this moment. This day, I think that was 22nd February. I never traded GJ this day. So there was nothing to buy from the 4 hour. There was no POI. So this day you wouldn't do nothing, right? So we broke another fractal structure high again. We broke another fractal structure high again. Why am I calling this a fractal structure high? In case you want to find out. watch the market structure video in the description. That's going to help you understand fractal structure, internal and external. In case you don't know, go and watch that video. But if you understand already, this is a fractal structure high. So when this happens, don't expect me to still say I want to look for bearish um bearish retracement and here's my draw liquidity for now. I won't say that, okay, because price is still bullish. So we put back to this. So in this point, this place becomes the next POI or the next draw liquidity, because as we broke this place, we need to retrace into something to go higher, or something that might fail and create a change of character for us to think of here being the next draw liquidity. So this draw liquidity is going to change most of the time, especially when you're trying to counter trade. So now, as price retraced to this draw liquidity, it swept it. Then I knew that the next draw liquidity is going to be this high, and that's how price went to this high. Now we have broken it. Where's the next draw liquidity? It's going to be any POI down, and that's how price chased it till it got to this POI down. You see, but price broke below. So that's now a sign that price wants to what come here. After price breaking below here, it's a sign. So now that you've seen that price has broken below, you want price to retrace back to a point of interest or create a buy side sweep, just like what's happened already. Create a buy side sweep or retrace to other block or something, and from there you're expecting price to drop straight to the draw liquidity, and that's what price did. And the next is from this draw liquidity. Where's the next draw liquidity? This high. So you're gonna trade towards this high, but would you just start trading towards this high because price is coming from here? Not really. On this particular day, you can initiate buy trades, but after this day, you have to be smart. You have to wait for price to shift bullish before you engage on the fractals. So price has created this high, pulled back and broke it. So that's the shifting of bullish of market structure for the fractal structure. You get, that's like a shift in fractal structures. So yeah, so now as we shifted here, which is at the time I'm making this video, as we shifted here, I'm expecting price or GJ to pull to either this fair value gap or other block and then make it to the final draw liquidity. I am expecting price to, okay, that's gonna be red because this is an internal structure high. And if you don't know why it's an internal structure high, watch the market structure video below. I don't want to overcrowd your information on this video. I just want to focus on draw liquidity. So yes, so you need to understand this logic, and when this happens, you know that you're aiming straight up at here. That's how to follow up this draw liquidity easily. Okay, the same thing applies to the daily time frame. They're all the same. Whatever market structure you're talking about, no matter the time frame you're talking about, market structure is market structure, and it's the same. Just exactly what's happening here. Do you see that? Exactly. So when we broke here, we knew that the next strong liquidity was going to be any POI to go up. Until when if the POI fails, that's when we are coming lower as a draw liquidity. So we broke here, we traced to this other block and slightly around the sell side liquidity. Once it happens, you know that the next draw liquidity is high. And you see price ran there straight. And now price ran there straight. Where's the next draw liquidity? We will first look at this other block here. When price fails it, we'll know what's next. So you see when price came inside it and failed it, and also failed running or closing as a pin bar under this. And you ask, so in all these days you try this, are you going to lose? That's why we have the lower time frame confirmation. You have to make your lower time frame confirmation so solid that it hardly gives you an entry when price also fail a higher time frame POI. So that's why mine is on the 15 and nothing lower, so that before 15 minutes giving my entry confirmation, I'm sure that this price intends to go this direction. So after this has been filled, I know that okay, the next draw liquidity will be these very discount areas, like the sell side liquidity here, the other block here, the fair value gap here, the rejection block here. So the price slided through all of them and chose the rejection block. So that's how I knew the next draw liquidity is going to be this high. And you see how price struggled, but then got there. So all these levels you'll be looking for buy opportunities on the lower time frame because you know that the next draw liquidity is here. This is how you follow this whole draw liquidity thing to master it properly. Okay, to master it properly. Now the same thing happened here. You broke above this high draw liquidity is price enter the FG. You know that then this next draw liquidity. Okay, we know that this next draw liquidity. So price enter the FG met it. Price breaks above this again, we know that the next one liquidity is going to be down first. So price enter this FG did not respect it. When you see things like this, multiple candles ending and not flipping up, you know that this is weak. So at here you look for sell trades till price gets to this. I know that this is capable of pushing price to the next strong liquidity which is high. As you can see from here, price won't do that. It's just a normal higher high, higher low pattern. So don't take it any uh this is like it's difficult. It's not difficult, right? So see you guys in the next video. Do well to like the video and subscribe if you found it helpful. We look forward to the next video, guys. Peace out.